Hello everyone and welcome to our monthly review of the economy. This month Rupee is making headlines. Before that it was inflation which was worrying us. Not that the inflation worries have gone away, but the Rupee has become the macroeconomic issue which is of critical concern at this juncture. Well, rupee has historically depreciated against the US dollar. That's not something new, but it is the speed of depreciation which leads to major concerns in the market. It raises alarm bells. And same is happening this time as rupee has depreciated 5% against the US dollar in this fiscal year. Now, one way to look at the weakness of the currency or the volatility is to examine how vulnerable an economy is and what is the quantum of shock. Well, in the external vulnerability is typically measured as the size of the current account deficit, the foreign exchange cover, the extent of short-term borrowings, and shocks typically take the form of events like the global financial crisis, taper tantrum. It could be any geopolitical development, it could be a war, or even when Fed raises interest rates very sharply. Now, in this framework, if we look at the last three episodes of rupee volatility, the first one was the global financial crisis, where our external vulnerability was low. We were doing quite well at that time, but the shock was massive. So I think that led to a very sharp weakening of the rupee against the US dollar. The second episode, which was a contrast to this, was during the taper tantrum period, when we were part of the fragile five. Our external vulnerability was quite high, and even a very mild shock like the Fed announcing that it could start tapering its quantitative easing program was enough to rattle the currency. And the third is what is going on right now, where I think we have somewhat better external vulnerability than the taper tantrum, but the shock is very complex and has multiple moving parts to it. Let us now dig a bit deeper into the exchange rate volatility that we are currently witnessing. As I was pointing out, the global shocks have multiplied in the last couple of quarters. The number one shock right now is very aggressive rate hikes from the Fed, which is narrowing the interest rate differential between the US and Indian bonds, and that leads to an outflow of capital. Number two is the Russia-Ukraine conflict, which has not only led to extreme volatility and high levels of commodity and crude prices, which does have an impact on our currency, but has also led to extreme uncertainty because of geopolitical shifts, sanctions, etc. And number three, the point I would like to make is that this is happening while we have still not got over the problem of COVID-19. It is down, but certainly not out. So in this scenario, our external vulnerability is a bit better than it was during the taper tantrum, but it is now worsening. The current account deficit, for instance, is expected to go up to 3% of GDP from 1.2% in the last fiscal year. Government, RBI, they are taking multiple steps to tackle this problem. The number one step from the RBI is raising of interest rates to tackle inflation, which also allows the economy to handle the currency shock better, because when interest rates in India rise, they narrow the interest rate differential with the US, or at least they check the speed with which the interest rate differential is narrowing. The number two is what RBI recently did, which is to announce measures to open up the capital account a bit more so that capital can flow in, and I think this is going to shore up the supply of US dollars in India. And number three, from the government side, they have announced some restrictions on import items which were growing very fast, like the gold, where I think an import duty has been announced. So all these measures will help a bit, but I don't think they can fundamentally alter the direction of the currency, at least in the near term. So what we believe is over next couple of months, extreme volatility will play out in the rupee. It's hard to predict when the underlying problems will stabilize. We have noticed in the past that rupee weakens a lot during the crisis period, but it also strengthens when the things stabilize. So till the time the underlying situation improves, I think we should expect rupee to be volatile. Thank you very much for listening in. See you next month.